Hello friends, welcome to the Manthan series of BFM. As you know, in Manthan series we are covering all the subjects of CIB, compulsory ones, all of them. Numericals, objective questions, case studies, previous year questions, everything is covered. So, follow the series completely, subscribe to the channel, click on the bell icon. Don't forget these, okay? Let's start, okay? Importantly, share it with your friends. Today I will be covering Introduction to Treasury Management. This is a part of your module C. Okay. So, I will be covering Introduction to Treasury Management. So, in Treasury Management, kindly note what are the topics, important ones. See, importantly remember, Treasury today is not a Treasury as we had earlier. It is basically, Treasury is now integrated Treasury. Integrated means what? This Treasury is relating to your bank also and to the international markets also. So now our Treasury has become integrated Treasury. I will be mainly focusing on all the important aspects of Treasury. Plus, at the end, I will be solving one important numerical. Very important one. Okay, don't miss that. So let's start. The main function of treasury management in banks is to. Means why is treasury management that important in banks? Focus solely on accepting deposits and lending money to the public. Generate extra income by investing and trading in various securities. Manage the bank's assets and liabilities effectively, both B and C. As I told you, see, integrated treasury, important word is there now. Integrated treasury. This has become a integrated treasury now. Integrated treasury. Treasury. Okay. This is now an integrated treasury. What is integrated treasury? Now, integrated treasury means, kindly note, integrated treasury. It means basically it is connecting your bank's assets and liabilities to the international markets. Okay, that is known as integration, joining. So you can see this extra income by investing and trading in various securities. Whatever money I get it from my loans, from my deposits. So that money, I see, what does the bank do? This is a bank, or you call it treasury. This is a treasury, bank treasury. Let's call it clearly bank treasury. It gets money through deposits, okay, and some capital part, means tier 1, tier 2 capital, or banks also take short-term loans, okay, or capital, tier 1 or tier 2 capital. So it gets money through these two parts. What does it do with this money? Either it gives loans or it invests. Okay. So this loans part is handled by the banking department. Banking means your corporate finance, your trade finance, your retail finance. All these handle the loans part. And treasury handles the investment part. So income by investing and trading in various securities, number one. Manage the bank's assets and liabilities effectively. ALM, that's called as ALM. Treasury's main role is managing the ALM, assets and liability management. So the answer over here is both B and C. Okay. We'll learn about ALM in further topics. So that's why I'm saying follow all the videos. Okay, same time on the same channel. Which of the following is a key aspect of liquidity management within the treasury operations? Key aspect of liquidity. Liquidity means what? Daily cash. Understand this. Don't get confused between liquidity and liquidation. Don't get confused between these. Liquidity and liquidation. Don't get confused between these, because liquidity problem every bank faces. Liquidation problem very few banks face. Liquidation means bankruptcy. Okay. So here we are talking of liquidity. I don't have money. See, every bank will have the same problem. Let it be small bank, let it be big bank. They'll have the same problem. The resources are limited and the uses are many. Okay. So, what is the key aspect of liquidity? Investing in long-term fixed asset securities, meeting the reserve requirements and managing short-term funding needs, providing loans to retail customers and collecting overdue payments from the borrowers. Depends. Imagine fast. If you look at the question over here, some of you might tend to answer this D. Some of you might tend to answer this C, but the real answer is not C, not D, B. Kindly note, liquidity or even the bank treasury. Treasury's job is always short term. It has to look at short term. Even you look at the RBI. RBI focuses on short term buckets up to 28 days in ALM. Main role of treasury is always short-term funding. It has to see to it that the bank gets the short-term funds very fast so that the daily operations are not hampered. For long-term funds also there are separate ways, but 90% focus is on short-term. Okay. So reserve requirements. Reserve means your CRR, SLR, CRAR, all these now. Now CRAR has also been added. Okay, reserve requirements, meeting the reserve requirements. Okay, CRR, SLR are to be maintained by the banks in our country compulsorily. CRAR is a Basel norm. Capital to risk weighted asset ratio, or you call it CAR also, capital adequacy ratio. Okay. What is the present CRAR given by RBI? Along with capital conservation buffer. I want full answer. CRAR along with capital conservation buffer. It is, let me see comments. It is 11.5%. 11.5. Okay. Treasury management plays a crucial role in managing various risks. Which of the following is not typically the primary risk managed by the treasury? So not. Treasury manages all the risks, but which is not managed by treasury? Interest rate risk, foreign exchange risk, operational risk, credit risk associated with loans and advances. What is not managed by treasury? Think of it. What is not managed by treasury? What is the interest rate risk? What is interest rate risk? Interest rate risk means the interest rates, or you can call it the repo rates, going up and down. Accordingly, if the interest rates go up and down, accordingly your loan rates and the deposit rates will go up and down, isn't it? Accordingly, the rates of your bonds, means we call it the yields of your bonds will go up and down. Accordingly, your IRR will go down, up and down. IRR means internal rate of return. So everything in banking, finally, kindly remember, finally you call it loans, you call it investment. Ultimately, it boils down to IRR, internal rate of return. Because that is the only rate which gives you BEP, break-even point. What is your cost? What is your income? Break-even point. Zero, no profit, no loss. That is basically IRR. Where your cost of funds is equal to your application of funds. So you have to always work beyond IRR. Okay? In any loan, any investments. So not typically the risk managed by the treasury. So this is the answer. Credit risk is not associated with the loans. See, loans are not given by the treasury that much. Okay. So treasury will not give this loan. This will be handled by the other teams, right? Your this credit team, your retail team, your trade finance, they will handle this, isn't it? So interest rate risk, godless. What is foreign exchange risk? The rate of dollar going up and down. Okay. Similarly, in relation to that, you will also, your overall portfolio will fluctuate, isn't it? And operational risk. Operational risk. Operational risk means related to operations. Okay. See, this operations risk will be there everywhere. Let it be treasury, let it be a retail banking, let it be a corporate banking, you do anything, there will be a operations risk. Okay. So importantly, credit risk is not with this treasury. Okay. Which of the following statements about the off-balance sheet exposure in treasury is true? Off-balance sheet. What is off-balance sheet? These are called as contingent liabilities. Contingent. These are called as contingent liabilities. What are contingent liabilities? These are also called as non-funded liabilities. See, various names are there for the same topic. Non-funded. Here you don't give the funds out. You don't give the funds out. Only you give your words or your guarantees. So these are all off balance sheet. These will never reflect in the balance sheet. These will reflect in the notes to the balance sheets below. So which of the following about the off balance sheet exposure is true? So you focus on the question, true or untrue. Always remember this, true or untrue. They are illegal. They are recorded as assets on the balance sheets. They are often related to derivative transactions like futures, options and swaps. They have no impact on the bank's risk profile. Do they have no impact on the bank's risk profile? It is. They are often related to derivative transactions like futures, options and swaps. Kindly note, all the derivative transactions will never reflect in balance sheet. Okay, they will never reflect. Plus others. Now, which are the off balance sheet items? There are many. These are derivatives is one of them. Others are LC, bank guarantee, court cases going against you. These are also contingent liabilities. Court cases. Suppose if the court case goes against you, the verdict goes against you, you'll have to pay. Right now you are not paying, but later you'll have to pay. Isn't it? All these things. So, they are often related to derivative transactions like futures, options and swaps. Now, what are futures? What are options? What are swaps? We'll be studying this. We are having the complete topic on futures, options and swaps in module C. Okay, we'll be studying it when the topic comes. Again, follow the complete series. Again, move on. Chalo, next. They have no impact on the bank's risk profile. Impossible. They have an impact. Illegal, forget it. Legal. Recorded as assets, they are not recorded as anywhere. That is the main thing which I told you. They will be never recorded in the balance sheet. Never. Okay. Where will they reflect then? If they are not recorded in the balance sheet, somewhere they will have to reflect. See, their incomes and expenses will be reflected in the P&L, profit and loss. And in the balance sheet, they will reflect as a notes to balance sheets below the balance sheets. Okay. Which of the following are typically traded on exchange? Traded. Futures and options, only futures, only options, swaps. Which are traded on the exchange? Futures and options, both. Okay. Now I'll tell you, under this NDS, okay, new system developed for trading of derivatives, NDS, OM, various. They have started trading these swaps also in two parts. Principal is traded separately, interest is traded separately, but that is very small amount. Main trading on derivatives is done through Future and options. They are heavily traded in the market. Okay. What is future? What is option? Simple trick I'll give you. Future means what? Giving some token amount, like booking the flat. Flat booking is similar to future. I'll give the token amount and book the rate and book that flat. Option is like the bike insurance. I'll buy the insurance. If I want, if there is an accident, I'll go to that insurance company. If there is no accident, my premium is gone. Same thing. Options is similar to bike insurance or car insurance. Future is similar to booking a flat. Simple, simple, simple. From the banker's perspective, I am telling you. Okay? The process of managing maturity and rate sensitivity of banks' assets and liabilities is known as maturity and rate sensitivity of banks' assets and liabilities is known as credit risk management, operational risk management, ALM, asset liability management, and capital adequacy management. So maturity and risk sensitivity, rate sensitivity. Maturity, see, under ALM, you have to manage only two things. Always remember. RBI also focuses on these two things. One is maturity and second is your ROI, rate of interest, or yield you call it. These are the only two things which matter in treasury. Maturity profile, there should not be a mismatch in the maturity profile between your assets and liabilities. Means loans and deposits. They should match with each other. At least there's a percentage given by RBI. So generally it should match 100%, but at least the percentage which is prescribed by RBI. Number one. And interest rates means your yields. Yields should also match. Okay. This was the numerical I was talking of. Let's do. Okay. Given the tier 1 capital is 500 crores, tier 2 is 800 crores, and further given the RW of credit risk is 5000 crores, capital charge on market and operational risk is 200 crores, 100 and 100 crores respectively. This is in crores, crores. C-R-O-R-E-S, crores. R-E-S, okay. I'll just write CR. Here. Okay. Answer the following questions. If the CRAR is 11.5%, CAR or CRAR. So this question means there's only one question over here. Find the, let's say, CRAR. Find the CRAR. Okay. Find the CRAR. So CRAR equals to, let's solve. Very important 5 marks numerical. Definitely in the exam. Definitely. CRAR equals to capital upon RWA. Simple. Again break it up. Capital means tier 1 plus tier 2 capital. Capital means tier 1 plus tier 2. Okay. Capital is tier 1 plus tier 2. Okay. And RWA is what? RWA is of 3 types. Credit RWA plus market plus ops. These are the 3 RWAs. So you have to find both these, T1 plus T2 and credit market ops. Now look at this. Let's focus on capital. Capital. Okay. Kindly note one important point. T2 can never be greater than T1. T2 can never be greater than T1. So here T2 is given as 800. You don't have to take 800. You have to take maximum T1. So here your capital will be T1 plus T2. So that is equal to 500 plus 500. Focus on this, 500. I am not taking 800. T2 can never be greater than T1. So 1000. 1000 CR. Okay, capital. What about RWA? Look at this, what is given? RWA for credit risk is given. See, 3 RWAs you require. Credit market ops. Credit is given. So credit equals to Credit RWA. I'll directly write it like this. Credit RWA equals to what? 5,000? 5,000 CR. Forget this CR now. Okay. Now remaining two, look at this market and ops. For remaining two, what is given? See, for remaining two, market risk. Market risk capital charge is given. I'll mark it over here. Or let's do it over here. Okay. For market risk, okay, market RWA you want it. Remember the formula. RWA for market risk is, see, the formula is what? Capital upon RWA. Now you want RWA. So capital upon CRAR, standard CRAR. So capital upon, capital is given, capital upon standard CRAR. Standard CRAR is, it's given already. Look at this, 11.5. So capital is what? For market. Market is 200. See this, market first one, respectively it's mentioned. Okay. So 200 upon, what is your standard CRAR? 11.5 it's given, 0.115. Percent means divided by 100. So solve it. What is the answer? Get it everyone? 200 upon 0.115. What are you getting? Let me check the answer. Yeah, you also try it. I'll also, this is the new question. You also try it. I'll also do it. Let's see who gets faster. It is 1739. Okay, crores. Okay. Similarly, now ops RWA. Same formula. What is the capital given for ops? 100. So 100 upon same CRAR, 0.115. So that will be half of this, isn't it? This is 200, that is 100. So divided by 2, half of this, isn't it? So for ops it will be 869, isn't it? 869. So what is the CRAR then? CRAR equals to, look at this, I'll write it over here now. What is T1 plus T2? 1000. Upon, what is your total RWA? 5000 plus 1739 plus 869. Do it. Everyone, try this. It is 7608. 7608 multiplied by 100 because it's in percentage. Okay, multiplied by 100 because it's in percentage over here. Okay, so what is the answer? 7609. Okay, 9 it is. 76088. Sorry, 8 it is. Okay, so 7608. Get the answer. 1000 upon 7608. Get this answer, everyone. What is it you are getting? 1000 upon 7608. 7608. So you are getting it as 13.14%. You are getting it as 13.14% after multiplying with 100. Your final answer. Okay? Your final answer is this. Got it? This was the important numerical which is asked in exam. Now before going, everyone join the Officers Pro batch immediately. Officers Pro batch. Okay? Always purchase the app purchase the batch by downloading the app first. Download the app from Android, iPhone both. Download the app and then you will get 1% extra in this. You can join the CIB Increment Mahapack, one of the best Mahapacks. In this Mahapack, you will be getting ebooks and physical books, both. Formula Bank in physical books, 15 plus batches per subject. And add to this, you are getting right now double validity. You buy for 6 months, you get it for 12 months. You buy for 12 months, you get it for 24 months. And for that, you will have to use the code Y432. Never forget this code, Y432. Kindly note, this is one of the best Mahapacks. 15 plus batches per subject are available over here. Per subject. Okay. You can also join the Officers Pro batch. Okay. Officers Pro batch starting just now. Okay. Just now it is starting, still in the starting stage. You are not missing anything. Detailed batch, numericals, objective questions, case studies, everything covered. Ebooks, mock tests, online live classes, recorded sessions. If you miss out something, then use the recorded sessions. Then ebooks and mock tests. Mock tests are to the level of chapter wise, per chapter, plus full length also. That is also separate. 100 marks separate, chapter wise separate. Ebooks. Okay, ebooks means physical books also. See, I gave you in that Mahapack. Physical and ebooks. Similarly, you can get the ebooks over here. Join it ASAP. And discount, again the same. See this, discount is going on huge. Y432. Never forget this code. 80% discount plus 1% extra. 81. Join it ASAP. Okay? Bye.